VICI Properties has crashed by about 15% over the past few months alone, significantly underperforming the broader REIT market. As a result, a lot of you have been asking me if now would be a good time to buy the dip or whether this is a warning sign of more pain ahead. I'll keep this one short. I think that is a great buying opportunity, and in today's video I'm going to explain to you why. Hey, this is Yossi, I run a small investment firm that specializes in REIT investing, and today I'm going to give you an update on VICI Properties. But before I get into it, I want to remind you that we are sharing all our top picks for 2026 at the moment at High Yield Landlord, and you can gain full access to this entire series by joining us for a 2-week free trial. It will be the first link in the description of this video. So why do I think that VICI Properties is opportunistic at the moment? In short, its valuation is now suddenly a lot more compelling, despite the fact that fundamentally nothing has changed for the worse for the company. On the contrary, VICI just released strong third quarter results, growing its AFFO per share by 5.3%. It also hiked its full year guidance for AFFO per share, it hiked its dividend by 4%, and closed another $1.2 billion deal at a 7.5% cap rate, which should be accretive to its 2026 results. This latest portfolio acquisition included the Stratosphere Casino, further expanding VICI's presence on the Las Vegas Strip, as well as several other dominant casinos in Nevada. Importantly, it further diversifies VICI's tenant base, which I think over time will be rewarded with a higher valuation multiple. So why is the stock selling off if the company is doing so well? In short, VICI has been sliding down in sympathy with its two biggest tenants, Caesars Entertainment and MGM Resorts. Both have recently reported some weaknesses in their Las Vegas properties as a result of a weakening consumer and less international tourism. But what the market appears to have forgotten here is that VICI is a triple net lease landlord and not a casino operator. Its 40-year lease is protected from such temporary weaknesses, given that its rents are preset for this entire period with preset annual rent escalations of about 2%. This explains why the REIT's cash flow and dividend kept on rising even during the pandemic, which was arguably the worst possible crisis for a casino operator. Back then, we faced lockdowns, significant restrictions, and international trips were put on hold, and not even that affected VICI Properties' cash flow and dividend payments. In fact, the REIT actually enjoyed some of the fastest growth in its peer group during this tough period, beating even the likes of Agree Realty, Essential Properties Realty Trust, WP Carey, Realty Income, and most others. It shows that VICI's properties are absolutely mission critical to its tenants, and it explains why it has been able to enjoy a 100% occupancy rate since its inception and has not missed a single rent payment, not even during the pandemic. And so if the pandemic couldn't derail VICI, I don't think that this temporary period of weakness will either. And you will note that I'm using the word temporary here because I expect Las Vegas to do really well over the long run. Many fear-mongering headlines are now making it seem as if Las Vegas had turned into a ghost town, but in reality, the hotels on the Strip are still enjoying occupancy rates in the 90s, so clearly this is not the case. Many people also complain that prices have become too high in Las Vegas, but ask yourself, why is that? The reason why prices are so high is because there's a lot of demand. It's a clear contradiction to claim that Las Vegas has become a ghost town and that prices are too high at the same time. If the demand wasn't there, prices would also be a lot lower. The reality is that Las Vegas has transformed itself into a global entertainment hub with major new sports teams, Formula 1, the Sphere, lots of shows, major conventions, and much more. It's also attracting a lot of people and businesses from high-tax states like California, which is now resulting in strong population growth. Las Vegas has faced many cycles in the past, and people are always quick to claim that the city will never recover from this as if this time was different, and yet the city always bounces back stronger than ever. And I don't think that this time will be any different. This might be a bit far-fetched to some of you, but over the long run, if the AI revolution delivers much greater wealth, better work-life balance, and universal basic income as many predict, I would expect Las Vegas to be one of the biggest winners from this. That's because in that scenario, people will be able to afford to spend a lot more money and time on entertainment, and they could also afford to take greater risk gambling their money. In fact, if people have that extra safety of a universal basic income, I would expect that to lead to more gambling as people seek to get their dose of adrenaline by taking greater risk through gambling. Therefore, expect the owners of these irreplaceable properties to do just fine over the long run, and during period of short-term weakness, we are well protected by the long-term leases. This makes the risk-reward very compelling in my opinion, especially at today's discounted valuations. VICI is now trading at a near 5-year low at just 11.8 times AFFO, and it's offering a 6.3% dividend yield that's very well covered. With a 6.3% dividend yield, the REIT only needs to grow its FFO per share by 3.7% annually in order for shareholders to reach double double-digit total returns. And I think that this is very feasible for VICI given that it has historically grown at about a 2 times faster rate than this. While they're now larger size and the higher interest rates are clear headwinds, the REIT still enjoys near 2% annual rent escalations in its leases. It also retains about 750 million annually in free cash flow to deploy new opportunities, and its balance sheet is in great shape with a 5 times debt to EBITDA. I think that the recent weaknesses may also push more casino operators to consider sale and leaseback transactions, potentially resulting in more acquisition opportunities for VICI in the near term. Finally, as interest rates continue to be cut, I expect some of that 7 trillion currently sitting in money market funds to make its way back to the REIT sector, and I think that VICI will be a prime target for a lot of income-driven investors given its great track record and its historically high dividend yield. Simply repricing from today's 6.3% dividend yield down to a 5% dividend yield would result in about 25% upside from here. And on top of that, you're of course also earning the yield and the growth, which I expect to result in about 10% annual total returns combined together. For all these reasons, we currently give VICI Properties a strong buy at high yield landlord, and we're currently considering reinitiating a position in the company. The only reason why we don't currently own it is because we slightly prefer another casino play, which in our opinion makes more sense for higher risk tolerant investors who don't need current income. However, if you're a more conservative investor and want the dividend, then it's hard to beat VICI at the moment. Now let me know in the comment section below what you think of VICI Properties. Do you prefer VICI or Realty Income, or VICI or Agree Realty? What's your favorite net lease REIT and which should I cover next? Let me know below. Also, as I mentioned earlier, you can access my full portfolio, all our trade alerts and our top picks for 2026 series by joining us for a 2-week free trial at High Yield Landlord. It's the first link in the description. Finally, if you could please click the like button to support the channel, I would greatly appreciate it. Thanks so much for your interest here at my next one. Bye bye.